Hello everyone, welcome back to the channel. If you're new here, this channel is all about helping you succeed in business and making smart investment decisions through our business and educational videos. Today we are talking about 5 stocks to buy before the 2026 Nigerian tax reform. But I know someone would ask, why now? Because reforms can shift the rules. Some sectors benefit massively from new incentives, lower taxes or other government support. So my major focus is on those stocks I found undervalued, and with this 2026 tax reform, they can perform absolutely well. Just be sure that you watch this video to the end. So getting on early on undervalued stocks in the right sectors could set you up for big gains. I'll break down why each will benefit from the tax reform both fundamentally and technically. Before we dive in fully, please do me a favor to smash the like button and subscribe. And also click the bell so you don't miss future updates. If you want deeper insights or breakdowns, join our channel membership using the link in the description. And if you want one-on-one coaching for stocks and business guidance, send me an email using the email address linked inside the channel description and this video below. So without wasting much time, let's dive into this video. The first stock is Lakes PLC. This company is under the agribusiness sector and is currently trading around 12 naira per share as at when recording this video. Lakes is a big agro-industrial player in Nigeria, focused on palm oil production, integrated agriculture and large-scale processing. They have over 30,000 acres of land across Nigeria and are expanding rapidly. You could recall sometime in 2025, the CEO Chukwumodi disclosed expansion plan for 2026, which involves planting 1,500 acres of oil palm, installing a new palm kernel oil mill, and designating 100 acres for livestock. The company aims to fully utilize its plantations capacity and its new larger palm kernel oil mill, and also build up its nursery for seedlings to ensure uninterrupted operations. This expansion is supported by a recent 235 billion naira equity raise, primarily for the acquisition of Agro-Allied Resources and Processing Nigeria Limited and upgrading processing facilities. But all these aside, here are reasons why Lakes could benefit from 2026 tax reform. Government often incentivizes local food production through tax breaks or reduced import duties. Again, is that Lakes is undervalued compared to its growth potential. The market hasn't priced in their capital expansion and acquisitions. Technically, the stock is trading at low price levels, giving early investors upside potential if the reform boosts local agricultural incentives. But the key risks I see in Lakes are execution challenges, weather/climate risks, and input costs. The next stock on the list is Chams Holdings PLC. Chams is under the fintech/technology sector. It operates in digital payments, identity management, and card services. They've shown strong revenue growth recently and are expanding into fintech solutions for both individuals and businesses. Why I believe it could benefit from 2026 tax reform is that government often give tax incentives to digital infrastructure and fintech companies to boost modernization. That aside, Chams is undervalued given its current revenue growth and expansion plans. Technically, the stock is in a turnaround phase because the market has not fully priced in its growth potential. But here are the risks I see: regulatory hurdles, margin pressure, execution challenges, and stock volatility. But as for me, I see this stock doing well in the future, but please watch your risk tolerance. The third stock is from the consumer staples and it's none other than Nigerian Breweries PLC. I hope you know that Nigerian Breweries is a leading consumer staples company in beverages and packaged goods with a strong distribution network nationwide. The company is a growth company considering strong revenue growth of 48% in the first 9 months of 2025 and a significant return to profitability after a previous loss. This growth is attributed to a recovery in profitability driven by strong revenue, strategic pricing, market expansion, and operational efficiencies. Analysts also project continued growth in earnings and revenue for the company. Why it could benefit from 2026 tax reform is because consumer staples benefit if government provides tax breaks or incentives for local production or reduces import duties on raw materials. The stock is currently trading at a lower PE ratio than historical averages, suggesting undervaluation. Technically, the stock has a strong support level and has historically rallied after policy changes affecting consumption or production costs. The risks associated with this company is inflation, currency fluctuations, and consumer demand slowdown. The fourth stock is Geregu Power PLC. Geregu Power PLC is a publicly listed power generation company on the Nigerian Nigerian exchange under the utilities/power sector. They operate one of Nigeria's major gas-fired power plants, supplying electricity to the national grid. Since listing on NGX, Geregu has been recognized for strong corporate governance and transparent operations, making it a favorite among investors looking for exposure into the utilities sector. This company will benefit from the 2026 tax reform because utilities and power generation are expected to benefit if the government introduces tax incentives, reduced levies, or infrastructure support under the 2026 reform. Geregu Power PLC demonstrated strong growth in revenue and overall profitability in 2025, although it faced challenges like operational constraints in first quarter. The company's forecast suggests continued positive performance, with a projected full-year 2025 profit after tax of around 44 billion naira. Their 2025 financial highlights of 9 months ended 30th September 2025 shows that Geregu revenue grew by 16.8% year-on-year to 131.47 billion naira, driven primarily by energy sales and capacity charges. Profit after tax for the 9-month period was 25.10 billion naira. That's a 3.76% increase from the same period in 2024. Total assets increased by 12.2% to 273.15 billion naira from 243.47 billion naira at the end of 2024, reflecting a strengthened balance sheet. What about earnings per share? It rose to 10.04 naira from 9.68 naira in the prior year period. Geregu is currently undervalued relative to its capacity and revenue potential. If reform reduce operational costs or improve tariffs, the stock could see significant upside. Technically, Geregu has a strong support level on the chart since its NGX listing, with a history of gradual accumulation. Investors entering now could ride potential gains as policy and infrastructure improvement kicks in. And the last but not the least, which is the fifth stock, is Fitson Healthcare PLC. Fitson Healthcare is a leading pharmaceutical company in Nigeria producing medicines and healthcare products. The company is undervalued compared to its peers and has solid growth potential. Fitson is experiencing strong growth in 2025 with significant increases in revenue and profits, driven by high demand and strategic expansion and reduction in foreign exchange losses. The company's performance in the first half of 2025 highlights substantial growth compared to the same period in 2024. Revenue surged to 62.64 billion naira, and that's a 68% year-over-year increase from 37.25 billion naira. Profit after tax jumped by an impressive 298% to 6.02 billion naira, up from 1.51 billion naira. What about operating profit? It increased by 177% to 12.16 billion naira, while basic earnings per share rose to 121 kobo from 21 kobo. Among the things that drives the growth are strong sales, operational efficiency, reduced FX losses, strategic expansion, and market position. Fitson stock has performed exponentially well in 2025, delivering a year-to-date gain of over 167% as of August 2025, making it a top performer in the sector. This strong market performance reflects significant investor confidence in its growth trajectory. An interesting outlook about this company is that management remains optimistic about continued growth, focusing on expanding its product portfolio and market share to maintain its leadership position in the African pharmaceutical landscape. Why it could benefit from 2026 tax reform is that tax incentives for local pharmaceutical production or healthcare infrastructure could boost margins. The stock is undervalued stock with strong fundamentals like revenue growth, healthy cash flow, and capacity expansion. Technically, the stock shows accumulation at current levels, meaning smart money is buying in anticipation of growth. The risks I see include regulatory hurdles, import dependency for raw materials, and operational scale challenges. So the 5 stocks to watch before the 2026 Nigerian tax reform are Ella Lakes, Chams Holdings PLC, Nigerian Breweries PLC, Geregu Power PLC, and Fitson Healthcare PLC. These stocks are undervalued, positioned in sectors that are likely to benefit from the 2026 tax reform and have both fundamental and technical reasons for potential growth. Remember, always do your own research and consider diversification to reduce risk. If you found this video useful, please don't forget to like, subscribe, and hit the bell so you don't miss updates. For exclusive videos and breakdowns, join my channel membership. Link is in the channel and video description. But if you want personal coaching for stocks, investment, and business guidance, send email to the email address provided inside the channel and video description. Thanks for watching, and I hope to see you in my next video. Invest wisely and stay consistent.